All right, good afternoon. Hope you all enjoyed the lunch and are geared up for the second half of the day, which will start with these lovely folks who are all very excited, I can tell so far. And so this is the session here from the PSPs, on-ramp, pay, and payouts. And I think it should be noted that we pretty much in this room today have the entire market for payment service providers here. So if you are a prospective...
Don't tell the regulator that.
Well, if you're a prospective client, you're looking for a deal, I would say catch these guys at the happy hour and price them off against each other. So one thing to just get things kicked off, it's interesting to look at the PSP market. We've got acquiring, we've got merchant payouts, settlement, we've got on-ramp, off-ramp, and payouts. I'd love to kind of unpack that there in terms of like where you guys sit with stablecoins today and how they intersect with your current business. So I'll start with Jan and I'll come this way. So Jan, why don't you kick it off?
Thanks, Mark. So with Nuvei, you listed all those kind of steps of the ecosystem that we have on our platform, which is a combination of on-ramp, off-ramping, which is the fiat to crypto and crypto to fiat or digital assets. Then you have the acquiring piece, which is what we all do, and card issuance as well. And then we added into that ecosystem our new liquidity provider provision into the house, which they're actually physically in touching the crypto, have those accounts and liquidates. And then we added the banking space to it to close the full ecosystem for our kind of partners and merchants. So from our perspective, stablecoin is obviously on blockchain. It's the connection between DeFi and the traditional finance. It's the way to, the use case is always the cross-border payment ecosystem, which is it's there. We have two ways of doing this and kind of deploying it. We do it in-house with partners as well as through third parties, depending on jurisdictions and geos and speed. That's us. So we see it as going forward as the kind of the Swift of the cross-border with different mechanics, obviously. But if people are thinking of treasurers in particular, or non-crypto native guys thinking about reducing the cash management aspects of exposure to banks, I think this would be something maybe to consider, the stablecoin rails. So.
Excellent. Ash, how are you guys using stablecoins at checkout?
It's a good question. Very similar to Nabil, Pietro, and Jan. Checkout's a global card acquirer, so we look after a lot of enterprise and merchants in this space. The types of merchants we look after are gateways, exchanges, on and off ramps, a lot of the industry that you guys provide native solutions for, but we just sit in the fiat part of that world. We help the movement of money into the ecosystem, and then we also help settle that for our merchants, and this is where it's really critical for how stablecoins play a role. Today, there is latency in the settlement ecosystem, especially for treasurers, for large enterprises, even for our ecosystem, because there are different banking complexities and, like you alluded to, Swift, and the connectivity isn't there. So stablecoins is giving this intraday working capital efficiency benefit. It's a movable asset, and it's helping de-risk this for a lot of the opportunities that sit in fiat today. So that's where I see stablecoins sitting as a payment tool for companies, especially for our side, merchants that need to get settled faster, better, and also extend their capital and make it a little bit more efficient.
Pietro, you guys are a current client of Zero Hash, which are fiat crypto on-ramps. So maybe you could expand on how you guys are servicing this market today, because you see both sides of it, just as a service provider, as a PSP, but also then as your own on-ramp.
Yeah, you bring up a good point. I think trying to meet the customer where they are and both recognizing trends in consumer behavior. What does the customer want to pay with? What do they want to use? What are they looking to acquire? How can we deliver a solution? You mentioned an on and off-ramp product that is vertically integrated, right? Not just being the front end piece of it, not just being the liquidity side of it, working with partners like yourself to, create sort of that fee compression that makes this a scalable industry and not a niche. I think that's something that we take very seriously. I'd be remiss if I didn't say that we also own our own bank, our own acquiring bank, which gives us more of that vertical integration that, enhances, I would say, the solution set for potential merchants. And I think, we want to respond to demand and also anticipate future demand from our merchant network. We've seen quite a bit of interest for stablecoin settlement, right, as a way to either enhance or obviate away the FX complexity of being a multinational. We service many clients all over the world that are not just US domestic, not just UK domestic. Giving them an alternative form factor to settle in is a great opportunity there, and we're exploring more ways to continue doing that. And then I think, final point, just alluding to your comment on the on-ramp side, is how can we bring, as a PSP, world-class card processing, approval rates, all those things that are sort of the lifeblood of translating fiat value into a crypto ecosystem at a cost-effective way that we can get the next billion people to onboard into crypto and not keep it, to the current market size we have today.
And then Nabil, you guys were very public about your launch of like a merchant settlement product on USDC. Maybe you can tell us a bit more about that.
Yeah, so very similar to what these gentlemen are doing over here at their companies. WorldPay, one of our specialities, is serving cross-border e-commerce companies. And if you're a large multinational e-commerce company doing business in many countries, obviously how you manage currency and currency risk and cash movement is a key part of business for folks, in finance, treasury, operations, whatever it might be. And as part of our business globally, we offer our merchants the ability to accept payments in 150 plus currencies, and then we settle it back to them in about 26, depending on where you work with us. And so what we did is we added USDC as a 27th currency. So now, depending on where you're contracting and working with WorldPay, you could accept fiat payments, but receive the settlement or proceeds of that in stablecoins. And as you think about some of the clients we serve, whether in the crypto space or other complex businesses that have treasury requirements where they want to have a rail that's 24/7, 365, that's where we see some interest. What I would say, one piece of the puzzle that hasn't been solved yet that I personally spent a lot of time thinking about is, everyone talks about how stable coins can speed up settlement or money movement. But in the consumer payments ecosystem, it's actually tricky because companies like us, we don't provide funding to our clients until we receive it from Visa and MasterCard. And they're not really using stable coins in an active way. And they're not funding us 24/7, 365. They're typically funding us 1 or 2 times a day, depending on the geography. And so for us to be able to settle clients quicker with a stable coin, somebody needs to fill that fiat funding gap using their balance sheet. So that, I think, is a little bit of the challenge that no one's fully unlocked yet.
So while it's great for us, for a merchant to receive a payment from WorldPay in USDC, you're still waiting for cash on the far side from.
Yeah, you're not receiving the USDC any quicker than you would receive US dollars. But once you have it, then obviously to use it on change is much quicker and can be used, on more days or whatever. But that initial first step of getting the merchant their money faster, that hasn't been solved because somebody has to front the capital. And if you think about a payments company, most payments companies don't lend. Their capital structure and how their investors measure return is very different than a lending company like a bank.
On the back of that, we saw those stats that came out recently, I think, and Edward mentioned it in his presentation earlier, of total value traded on USDC versus other payment mechanisms like Visa, which I think both are around $11 trillion a year. We're starting to see stablecoins become bigger, faster than the card networks that are also in the market. What do you see, I guess, as the future of that? Are we going to see more things happen beyond the card network themselves, where it's a on-ramp, off-ramp payment in USDC, and it doesn't touch a card network at all? Maybe what's your thoughts on it there as we think about the future of these two things together?
So I think, is there going to be more payments off the card networks, as a relative proportion? The answer is yes, and you're seeing that in a lot of places like Latin America or Asia, where, in Brazil, PIX, which is their kind of bank-to-bank or account-to-account method, has, in less than 5 years, taken 25-ish% of the market there. Similarly, in India, the government launched the Unified Payment Instrument, I think it was about 5-6 years ago, and it's got about 35-40% market share. So I think outside the US and Europe, you're seeing a lot of non-Visa, MasterCard payment methods gain market share. And part of the reason that they are gaining share is they're cheaper, they're quicker, they're available 24/7, 365. I'm sure crypto is going to and does play a place in some of that, particularly in the trading landscape or the payments landscape. There's a lot of companies, to Ash's point, working on cross-border money movement using stable coins to make it quicker and cheaper and more highly available. So I think that trend's going to continue. But I think if you talk to Visa and MasterCard, you'll hear them say a lot, we want to be the network of networks. We don't view that necessarily as competitive. It's like another payment method, another currency that we're going to integrate, which is why you've seen Visa, for example, buy an open banking company called Tink. And you'll hear their CEO again use this phrase, network of networks. So they're kind of thinking about how do we, in this like increasingly fragmented payment landscape, whether it's account to account methods, whether it's digital or e-wallets, whether it's crypto, how do they, bring value through the network that they have, whether it's rules, fraud and risk management, regulatory positioning, all that sort of stuff.
Yeah, that's exactly where I mean, the only thing to add to that is exactly what you said. They're getting more native into local and APM methods themselves. And then if you look at their recent announcement on both schemes, at their annual forums, they talk about peripheral services. So actually helping with user onboarding, trying to tokenize payment with identity. So you can see them kind of understand that there's like cannibalism on their ecosystem and that there's more efficient ways to do it. And whilst we enable that, we also have to keep an eye on the prize, and that's where the stablecoins sit. And I think also to add to your point, Nabil, on those efficiencies, there's the element of this market growing so much. I think in the last 90 days, another X billion just grew in USDE and more form factor of stablecoins is appearing. So these yield-bearing assets and how that translates through. To our point, we are the B2B ecosystem, but the B2B2C ecosystem means if these stablecoins can evolve and the stablecoin issuers can evolve and share that back-end economics of yield-bearing instruments into the market, we're going to see a ton of front-end user innovation that addresses, emerging markets plus the existing latency in our systems.
I mean, one trend I will just say, because we've seen the chart, right? I think it's one of the most used graphs in crypto of, stable coins are settling as much value as Visa.
Yeah.
What's interesting, right, on the issuance side, right, there's only just north of $100 billion of stable coins in circulation, which means money velocity is much higher in crypto, which I think speaks to the value add and the advantage of the form factor, turning money over more quickly, making it an easier, more frictionless experience. Not that any of us are necessarily macro pundits, but they're also, stable coins are the 17th largest purchaser of US Treasuries, right? So this could become systemically important infrastructure that I don't think any of our companies, respectively, can ignore. And so I think, relatively speaking, you want to lean into those trends, even though we have, a disjointed regulatory framework at the moment, and then match what the users and the demand is coming from. I mean, you think of Visa and MasterCard having a sort of duopoly situation with the card networks and payment infrastructure they offer. You can think of stablecoins as sort of the local payment method, but for the entire planet, because the internet is really the restrictor in terms of bandwidth or where you can reach those geographies. So that level of integration, I think, is very exciting, obviously, from a payments perspective.
We had John Egan on this morning talking about Stripe's Pay with Stablecoin product. I'm curious, from your perspectives, where do those products sit on your roadmap?
Not high.
Hard sell.
Not on.
Not on yet. What's your thoughts on that, Nabil? I'd love to kind of get your
So I said this at Paris Blockchain Week, for those of you that saw me speak at this breakfast. So I think the benefit to the merchant if a consumer pays with stablecoin is like it's cheaper and you get your money as a merchant almost instantaneously. But if I'm a consumer and I'm paying for coffee in the morning, I don't give a heck of a crap how fast the coffee shop gets their money. I just don't care, right? Like when I buy stuff online or like when I go to the store, I don't care when they get their money. I just want the goods.
The point of like it's more for markets that are maybe underserved, or it's more for hard to reach markets. Is that the I guess the reality here is that you've
potentially, yeah. But then on the flip side, like typically, as a global company, those harder to reach markets are usually the very small markets, right? So like from a addressable market, I don't know. Like
it's a margin-rich environment, right, Mark? Yeah.
That's what
yeah. So I would say like, look, we did a lot of work looking at crypto payment acceptance, like whether it was stable coins or Bitcoin or ETH. We looked at 10 or 15 companies out there that were doing this, how they were doing it, what the economics looked like, talked to a lot of clients about it. There's a huge amount of work behind that, but we weren't able to make the business case work right now.
Pietro, I'd love to get your thoughts on it, because you guys, and Jan as well, because you guys sit a little bit differently in that you have your own fiat crypto on-ramp products in the market today. Curious to kind of get your thoughts on how this fits into your business.
So I guess what I'm publicly allowed to say is that we're very interested in it. That being said, I think Nabil's point is very well taken. I look as a global payment processor where consumers potentially are short their sovereign currency, right? They don't want to hold local currency. What are they going to hold? And is that going to translate into their daily commercial activity? I think stablecoins probably represent the best option or opportunity for the, call it global south, or just regions of the world where you don't want to hold pesos or lira or whatever it may be. If you're going to be saving in that thing or that asset, and it's a stable asset, right, a fiat equivalent, we definitely want to serve those folks that may want to pay with that, or at least very much want to explore the opportunity to do so. And then, as you rightfully point out, having an on and off ramp product is just another access point to engage that customer. So if you look at things like customer acquisition, retention, and best serving that end user, having a more end-to-end solution seems to be, in my mind, the right play. But I'd love to hear your take.
I agree. I would divide it maybe into non-banking communities and really difficult to access. That's the value bringing kind of proposition. Then you have Nabil mentioned the consumers, which unless you bring in maybe on cards and you have a cards with stablecoin and they kind of spread it that way, that could work. On the card issuance side, on our side, it's B2B2C. If you look at the on-ramping, off-rampings, it's a combination of both. But I think, for us it's important that we just wait for the regulatory kind of footprint on this as well, because that would unlock potentially the APMs and the appetite of crypto blockchain related acceptance, which is for us the major blocker. We have around 700 APMs globally, which is massive. So once this is kind of accepted, then you have the last leg kind of managed into the banking transfers, avoiding the cards kind of rails. So that's the huge potential for us, but it depends. It depends if you're looking at non-banking or difficult, volatile currency sectors or segments. You're looking at consumers, you and me, buying coffee in the shop, or you're looking at treasurers. They're looking for ways of benefit of stablecoin cost, and also the exposure to banking partners and everything. So that's we're covering. So the focus is really on the regulatory APM related end goal.
Ash, what's happening at checkout?
Well, to Nabil's point, to get Nabil to buy his coffee on a stablecoin or Jan or Pietro, he might want 3%, 4% cashback, right?
I want my
Well, that's sweet. He wants his points. He wants his points in Amex.
And I want my chargeback protection.
Okay, he wants his chargeback protection.
Yeah.
So he's right. There is a couple of things to grow that adoption. To Jan's point, regulation, right? So I kind of touched on this earlier. If we can share that yield-bearing benefit that USDT and USDC and all these stablecoin issuers are experiencing today and pass that through to the consumer, we'll see adoption. We'll get Nabil's coffee spent in the morning, which I'm sure is in the billions here. But I think
I'm not that tired.
No, maybe the dinners, but we're moving to the dinners. But I think to get to that point, to Jan's point, current regulation with MiCA and even North America means that we can't actually pay that interest through to the consumer. So we need that regulatory framework, to your point, to open up a bit more to allow commerce. And that's kind of been gatekept a bit. Whereas if you look at the scheme ecosystem and the payments method, you can flow through benefits, right, through a banking or rewards product. So I think if that regulation eases up, that will help with mass adoption. And that's where payouts becomes interesting for companies like Nabil and ours as well, if we don't have our own native on-ramp like these two fine gentlemen. So that's kind of where I think it could go. But it needs regulation to open up, and we need to have a clear opportunity to give the benefit to the user. I think digital assets, and for enterprise, it makes sense. And for the end user, trying to get my dad to use his Crypto.com card to buy a beer, it's not going to happen, right? So unless all of a sudden there's that 3%.
Unless there's that incentive mechanism.
Exactly.
You made a comment there about wanting chargeback protection. The finality of crypto when you send it.
Friendly fraud.
Blessing and a curse.
Is it a feature? Is it a bug? How do you guys think about it?
There's this concept of desirable friction in money movement, which is actually not everybody wants to be able to just click a button and wire an infinite amount of money that can never be returned, or you have no recourse. So this comes up a lot with some of these online banking apps, particularly in the UK, where over the last 3 years they've added, for those in the UK, I'm sure when you guys have tried to transfer money over the last couple of years, it asks you 10 different questions. Have you met this person in person? Did they call you? Did they ask you to log in and screen share? Have you received a good in service? What's that?
Who are you sending money to?
All sorts. But I think some of the banks here have gone overboard, they've introduced too much friction, but there is this concept of desirable friction where, hey, I as a consumer, if I have to answer one or two questions or check one or two things, it gives me comfort that my money is actually going to the right person, or is being received as intended. So I think the finality I think it's a feature, like if you ask the engineers, but like for a lot of consumers, if they could just, fat finger a 28-digit wallet address and their money's gone forever, I don't know that consumers want that, right?
But
So-
in payments, I guess, for things like travel, it's great to have chargeback protection. You can imagine.
Yeah, so I would say like the value of Visa and MasterCard today, this is different than when they started, 40, 50 years ago. It's not about the money movement per se, it's about like the value they add around the money movement. Because you think about moving money today, it's not like when I send you or Ash money, I'm packing an envelope and dropping it in the post and then it's showing up. It's like what's actually happening is it's like digits, ones and zeros that are being shot across the internet from one place to another with many intermediaries. Like we've had the ability to send ones and zeros instantaneously over the internet for decades. That's what we do when we text each other and email each other and whatever, right? It's like sending data, which money today is just data, instantly and with finality. That capability has been around for decades. But that's not why people pay for payment acceptance. It's because of the fraud and risk management features that come with it, whether it's on the merchant side or the consumer side. It's for the reporting and reconciliation and data analytic features. It's for foreign currency exchange and risk management. So there's all these other like services and value additive things, many of which are required by regulation, that are encompassed in that quote unquote payment service, rather than just the movement of money. Because that, if you just want to move ones and zeros quickly, easy.
Ash, are merchants at checkout chomping at the bit to get a payment mechanism that has no chargeback included in it, or what does that
Merchants
look
love that.
Yeah.
Merchant demand, front end, I think they look to us for as acquirers to give them optionality, and then see what, based on that merchant's business, which segments pick up. So it's such a faffy answer, but I think we're still waiting and seeing at the moment. There's the demand is definitely, like you alluded to earlier, Mark. It's the back end, it's the optimization of treasury, and that for us is in a proliferation of not only like digital asset native companies, but the enterprise companies you serve. The likes of Netflix, Delivery, those types of large global e-commerce giants that run complex treasuries. To Nabil's point earlier, I can start to sense a shift around settlement factors, and that's where I'm feeling that trickle into it. It's like, actually, I might run 10% of my digital assets as treasury, and I can then pull out the liquidity from a money market fund the same day, versus like Nabil alluded to, the latency that we have to move money around 24 hours. Even you from your JP Morgan account, Mark, there's a weekend latency that kicks in, which is even a treasury's worst nightmare, right? 4-day working capital loss. Yeah.
There is I'd be remiss to move on this point, but we mentioned the on-ramps earlier that both Shift4 and that Nuvei have today. Very happy Zero Hash customers, by the way. But maybe we could unpack that a little bit. Pietro, what made you guys go and launch your own on-ramp? It's a very different approach to other acquirers in the space. It's a different move. Tell us more about that.
As far as our journey into the on and off ramp space, I think it was relatively simple. I mean, we were very lucky in the sense that we have a team that's pretty crypto native and is users of these types of products. And so we recognize that the current ecosystem is relatively well served, but not by players that have the same level of integration of payment processing and crypto natively in one house. It's typically more of a front end wrapper of a payment processing architecture. And so really, if you think about the economies of scale that we hope to achieve with crypto proliferating as a global money phenomenon, you want to try to offer it at the right price, because that definitely is a friction point, in particular when you talk about acquiring stable coins, right? Nobody wants to purchase $1 for $1.20. Like, that's never going to happen. And so how do you do that, right? In a way that allows for that translation of, call it fiat value to stablecoin value, which I think then is the catalyst to create a circular economy of earn in crypto, pay with crypto, settle in crypto for the folks that it's correct for, right? So ultimately, in sort of, let's say, first world banking opportunities, right? That's more of a novelty. People are going to pay with stablecoins because it's interesting or cool. But in other places, it is a genuine alternative to the current infrastructure. So we just leaned into that potential demand and thought it was the right decision to move forward with, the partnership with Zero Hash.
Yeah, and you guys have had a very successful product as well over at Nuvei Simplex. Tell us more about your journey in this space and what that product's evolved like over time.
So Simplex was acquired a couple of years back, actually. So they are dinosaurs of the market. They are in the market since 2013 or 14 or whenever. And so there is kind of a complement to the full payments ecosystem to integrate this piece into the payment platform. They start. It's actually a funny setup because Simplex is platform as a service, if you like. They don't really touch the crypto by themselves, but they're using a liquidity provider which we acquired as well in the background. And they are the people who literally touch the crypto, has the blockchain-related licenses in place, and does the movement on the blockchain. But it allows you to also add more products to it within a regulated, compliant way. So you can add pay with crypto. You can add custody for, stablecoin if you like to do it. I think that's one of the biggest challenges from the non-crypto native clients, which they love the idea of stablecoin, they love the cost, they all understand the benefits. But the questions we kind of had a challenge and tried to solve was, I don't want to hold it. I don't want to kind of be exposed to this risk as a treasurer of a non-native crypto company. And then what I do with it, once I have it, I need to actually sell it. I need to say FX or there's some swap at the end of it. So I think when you crack those questions, those challenges for these guys with some maybe custody holding and shifting around in a wallet infrastructure without them even knowing that they're looking at crypto or talking to blockchain, because that would, to put the fear into them. But you're selling it as an APM de facto, which is this additional APM to them. And then you have the market and the volumes in it. I think kind of in a helping way to the treasurers.
Yeah, I had this one question here actually about the advancement in MCC codes on Visa. So we might just close on that one. But actually, there were some. On a serious note, what are some of the big changes do you think you need in the marketplace today to improve key things like acceptance rates, chargeback rates, take rates? I'll go one at a time, left to right. Jan, what do you think are some of the big changes that we need in this marketplace?
Look, the guys know we have a lot of guys working for us from schemes. so we work very actively on the MCC coding and an expansion on the stablecoin rather than to have it crypto coded MCC, which helps with everything around this. That's the main aspect. I think that's the main challenge for us. Then the regulatory piece, which allows you to unblock the APMs, which is, we have, as I said, lots of APMs. But if you're talking crypto, it narrows down very quickly to a couple of APMs very actively to be used. So that's a main challenge. So, and I'll pass it on because we're out of time.
I'm at scheme actually. I shouldn't even say that out loud. I'd say to add to that, I'm going to go left field here. Something like this, more of this is the industry coming together. The market's huge. Like there's enough for all of us to compete to deliver best market solutions, but work together. So I think the more collaboration that happens in market at a reasonable regulatory level, I'm not trying to build a mafia here, but the more we collaborate, the more we actually cross share, the better we can deliver to this ecosystem, which is in a nascent growth stage.
Yeah, I would echo that. And in the interest of time, just boil it down to cost compression, make it truly scalable technology for multinationals, large consumer bases, and ultimately keep the schemes close, but then also recognize that crypto in and of itself is its own form factor and unique, and lean into the most regulatory compliant way to facilitate that type of commerce.
And Nabil, to close.
Are these like closing thoughts or the MC?
Closing thoughts. The red light is blinking.
Yeah, I would encourage people that are working on payments related stuff in the crypto space to think about those other elements associated with the payment rather than just the movement of money or the movement of value. Because I think that part's largely solved. Like the technology, whether it's old school TCP or like blockchain or whatever, like I talked about earlier, that's there. But how do we take those other elements, again, many of which are required from a regulatory perspective, and associate those or bring those on chain or whatever? That's, I think, where a lot of the gaps are.